Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm happy to have with me once again Eric Coffin. Eric resides in Vancouver. He is the editor of a very good newsletter, namely Eric Coffin's HRA Journal. And you can learn more about Eric's service and sign up for his letter by going to hraadvisory.com. That's hraadvisory.com. Welcome, Eric. It's really good to have you with me again.
Thanks, Jay, and Merry Christmas to you and Teresa.
Merry Christmas to you and yours as well. It's a time of the year of happiness, and I know that you must be feeling a great deal of mixed feelings because of the losses that you've suffered, the personal losses of your brother and your wife, and for that, I still feel a great deal of sorrow for you, but I know you also have a lot to be thankful for. You have two beautiful children, and they certainly have to be a part of happiness at this time of the year. So, getting on to business now, we're looking back. I was just looking at some of the early months of this year. And I guess I ran into a slide that I had prepared for my talk at the PDAC, and I noticed that after February of last year, all of my gold stocks, I think all of them were up, and this different sectors that I break down my portfolio into, the producers, the near producers, and those that are more exploration companies, they were all up somewhere between 20 and 50% during the first couple of months of 2014, and I'm thinking as I look back, I should have just sold everything and gone fishing or played golf or done something else last year rather than to struggle through the year. But it's been a terrible year, and I'm assuming a terrible year in the sense that, these things just haven't worked out that well, but I'm assuming probably a similar experience for you, Eric, and if so, why are we having such a struggle these days in our sector?
Oh, yeah. I mean, PDAC's probably a good place to start. I mean, because at that point, gold had come off that horrendous dive that it had in 2013, and it had gotten up to the high 1300s. I mean, as it turned out, that was going to be the high watermark for the year.
Yeah.
And I think that's, in a nutshell, where things went wrong was that the gold price turned on us again and went as low as 1130. And I think when you're looking at venture stocks, if you will, I think we also got hurt by the fact that the oil market completely fell apart. And although it doesn't seem like that should be connected, and in fact, oil dropping is actually a good thing for gold miners, most of them. I think you had a lot of people that trade both of these stocks running away from oil and gas stocks as fast as they could, and I think they took the opportunity to capture some gains, I think, in the oil and gas sector and looked around for tax losses and had a pretty good idea where they'd find some, unfortunately.
Yeah, it's very easy to find tax losses in our sector.
There was another wave of selling after that. So I think, as we all know, so much of the sentiment in this sector depends on the gold price. So how next year goes is going to depend on what the gold price does, I think.
Yeah, no question about it. It's sort of strange, though, in a way, as you pointed out, as you alluded to a minute ago, that actually falling energy prices can be very, very positive for gold mining operations. But investors tend to look at assets like that. They tend to lump everything together, like hard assets and commodities and at least metals and energy, and trade them together, whereas I would argue that gold mining companies, especially gold mining companies, probably silver to an extent as well, actually benefit, especially when you look at some of the larger, really big bulk mineable projects that have to use enormous amounts of energy to haul around huge amounts of rock that contain very little gold in them. But in any event, do you think we might see some improvement in the operating profits of some of these mining companies? Let's say assume gold hangs in around $1,200. Do you think we might see some improvements in some of the operating, some of the producers this year, assuming energy prices stay low? I guess that's a big assumption itself. But
I don't think it's a huge assumption based on what's coming out of OPEC right now, unless production in the U.S. comes off a lot faster than I personally think it's going to, or some of the OPEC members cave. I think odds are reasonably good we're going to see oil prices in the $60 range, 60 to 70, say, for quite a while, I think, actually. It doesn't sound like either side of this game of chicken is blinking. And that being the case, if you look at, and then you hit the nail on the head there, you look at big bulk tonnage operators, it's not uncommon for one of these 50, 100,000 ton a day operations for energy costs to be in the neighborhood of 30% of their costs.
Mm-hmm.
Some of that's high, a fair amount of that's electricity to run the mills, but there's also, depending on how they're set up, there's very large fuel consumption. I mean, those ore trucks, the mileage is measured in tenths of a mile per gallon. So it makes a difference. I mean, I could see some of these big sort of marginal producers, if you will, seeing, 8 or 10% drop in cost. The other thing to keep in mind too is what the dollar has done, the U.S. dollar, in the last few months.
Mm-hmm.
That's been a bit of a nightmare, obviously, for commodity traders and gold investors. But again, if you look at companies that are domiciled in areas where most of their costs are non-U.S., that's also going to have a positive impact on them. If you're one I'm actually writing an editorial today for the latest journal, and it touches on a topic that I talked about years ago, and that's the effect of these changes. And when you look at, I put up a series of gold charts in different currencies, and the truth of the matter is, gold hasn't broken down in most currencies, and in fact, it's done very well.
Uh-huh.
Some of them. And if you're a company domiciled there, I saw your last piece about Russia. I don't know the specifics because I don't follow the company, but say you're Kinross and you've got a couple big mines in Russia, which they do. I would think between the energy costs and the ruble, their mine site cost structure just dropped like a rock. I mean,
yeah,
it's got to be great for their bottom line.
Yeah, very good point. I hadn't thought of that. Sure, yeah. That's well, even in Canada, there you have an advantage to an extent, about 10-11% or so, right?
Oh yeah, no, it's going to make a difference. Like most of the Canadian miners, their cost per ounce in U.S. dollar terms probably dropped or should drop about 10% because the Canadian dollar's gone from about 96, 97 to 86, 87. So it's going to help them.
Mm-hmm. Would like to get your take on a couple of the companies that I follow, that I know that you follow as well, and this is, purely from a selfish point of view. I guess I'm interested in companies that, some of the companies that you follow, starting with Precipitate Gold, which is a sentimental favorite of yours. It's one that you and your brother were involved with, your late brother David, before he passed away, and getting it started. And they've had some pretty decent exploration results. Could you just fill our listeners in a little bit on Precipitate Gold?
Yeah, Precipitate is a company my late brother and I were founders of. I'm still one of the largest shareholders, so I'll give you that non-objective caveat. They're in the Dominican Republic in an area called the Toreo Belt, which I'm a big fan of. I think this is a belt of rock that's going to generate. It's generated a couple of discoveries. I think it's going to generate more as it gets more attention. They did make a discovery this year. Of course, nobody cares in this market. They drilled a discovery hole of 18 meters of 4.5 grams, including it was 5 meters of 13 grams. Really nice hole. They should be just finishing up a follow-up program now, because what they needed to do was expand the grid. They targeted this drill hole with something called IP, induced polarization. It's a geophysical method, and they were looking for chargeability highs. This discovery hole was drilled about 70 meters south of the strongest chargeability high in the grid, but that also happens to be the northern edge of the grid. So they're expanding that grid right now. I don't know whether they're done yet, but I expect we'll see results from this new IP and probably some other groundwork in January. Based on the fact the highest chargeability is on the edge of the survey, I don't think you have to be a wild-eyed optimist to assume that anomaly is going to get bigger. It would be fairly shocking if it just disappeared. So I think that's one to watch. I mean, we've all lamented how few companies are actually doing anything, and although I know management of Precipitate was frustrated, put it mildly, that the market didn't care about their discovery. I've got a lot of respect for the fact that Jeff and Mike went right back at it, and they're expanding and improving the target for the next drill phase, because if the market gets any sort of love, people are looking for companies that are actually doing something. We're all sick of watching companies that are like watching paint dry.
Right.
I'm more interested in guys that are actually willing to go out and take take a shot, and they have a viable discovery here. I think it's a great shot. Personally.
Yeah, it sounds like it, and our listeners should know that it's a very low price stock. I think it was 12 cents or 13 cents or something like that, Eric.
Yeah. Well,
and
I want it to be.
and how many shares out there?
I think there's about 40 now.
Only 40 million.
Might be a little bit on, might be a touch under 40 actually.
Wow. Okay, so
35 maybe.
Okay, so just listeners, pay attention to this, because a 13-cent stock, 40 million shares or thereabouts, if they're onto a discovery, this is what makes this industry exciting once people pay any attention to it. When you start having discoveries, you can really start to see some real dramatic increases, and I'm not saying that's going to happen to precipitate gold, but as you just heard Eric say, they've had some nice drill holes on the edge of this IP anomaly, so it could good chance it's going to get it's going to be quite a bit bigger than one drill hole or a couple of very impressive drill holes. So I agree that's one to watch, and it's one that I probably should be paying more attention to as well. Well, Eric, my engineer is telling me that we are just about out of time, and I wanted to ask you about some of the other stocks that I follow, that I know you follow, stocks in addition to Precipitate Gold, which you just discussed, such as Gold Quest, Columbus Gold, Silvercrest Mines, Virginia Mines, which is soon to merge with Osisko Royalties. But as my engineer tells me, we're just about out of time, and so I did want to ask you one more thing before we part company today, and that is, as we head into 2015, could you tell us what would be your favorite gold stock?
Well, I'm gonna be non-objective, and you know which one I'm going to pick. But and telling your listeners, keep in mind I'm one of the biggest shareholders, so this is not an objective pick. But I'm really looking forward to the next drill program on Precipitate. I'm pretty excited about that project. I'm very comfortable the target's going to get bigger when they put out the results of the current phase of work, and I'm pretty excited about that one, because I think this sector needs discovery stories so badly.
Oh, for sure. Well, I really hope you're right about that. Precipitate Gold, PRG, in the Dominican Republic, and as you heard Eric talk a little bit ago about a couple of great drill holes they had, probably just on the edge of this IP anomaly. So lots of good potential there. There's no question about it. I mean, anytime you're buying an exploration stock, it's a risky proposition, but you don't get those great returns without assuming some risk. So I really hope you're right about that, for sentimental reasons as well as reasons to put money in our pockets, of course. So I really appreciate that, Eric, and wish you and your family all the best.